Started. Okay, here we go. Coming over to screen one. This is trading one shot on crude oil this morning, which I think we all knew has some pretty good moves today. It's actually still in a trade right here. So I'm going to work backwards. I'm going to start at the end and go back to the beginning. So this is the trade. I think you actually took this, Gary. I don't know where you got filled on this last trade here. Was it 45?
45.
Yeah, so right in here, which was actually a nice, see how you came out of this little consolidation pocket here, and it broke to the upside? Right in here. Had a really nice sort of consolidation pocket, ran up, pulled back, and then you had this break up. I don't know, you probably already stopped out of it, I would guess, huh?
Still in it with my last contracts.
You got, well, the auto trader has its stop sitting here at 66, so it just missed getting it here by 4 ticks. So I don't know where your stop is, but this is where the auto's got it sitting right here at 66.
Charles, can I just interrupt for a second? Earlier we called a long trade on the Bund at 135.25. If you took that trade and you've got multiples, you've got eight ticks in it, take some profit here and then go back to break even with the rest. If you only did a single, then just bring it to break even. Okay, I just wanted to say that.
Good for you. It's a nice move. So I've got like 4 or 5 charts to show, so I'm not going to go through every single trade here on crude. I'm just pointing out that on this last trade alone, you know, even if you didn't take advantage of the fact that you were up over $600 on this trade up in this area here, you actually had another chance to get in on a probe right here. You could stop out and be up $430. But crude got off to a good start. There were some questions earlier on when to start some of these auto traders, so let's go back and talk about oil. We like to fire up crude oil right around 6 o'clock. Typically, if there is going to be a move, it's going to happen a lot of times right out of the pit open here. And you can see that right here, and I think Rich and Gary were calling these as they broke between 6 and 6:30. Pretty much you had a better part of 170 ticks. And you can see here by the apex of this second or third long trade here, you were up around $1,000. This is here again. We point this out that basically in that first 30 to 60 minutes on crude oil, if you captured, you know, a good chunk of a move and you're up, you know, $1,000 plus, you pretty much want to lock it down. Right? You want to lock that down and capture that profit, because this is a big chunk of volatility that normally happens in that first 30 to 60 minutes on crude oil. Okay? Did get a little slapped around in here on this retrace, and that's because it hit this profit target. And we've shown before how to work around that. This is all the default settings on one shot. I haven't changed anything in here. Just turned it on at 6 and ran it till I think 7:30 or 8. So everything's standard, just right out of the box. And the default profit target is 80 ticks. So, you know, if you don't want these profit targets to be hit, because see what it did? It took a probie right after it and then got whacked. So, you know, bump that, you know, particularly on crude oil, 120, 140, even further, 160 if you don't want that profit target hit. And then it would re-enter. See how it re-entered here? Got whacked. But anyway, so after it was up $1,000 and had this 170 tick run, what do we think happened to it? Anybody? What happened on the right-hand side of this chart? What is the mystery to be revealed? Do we think we kept going up, more runs, or what do we think? What do we think happened after this point right here? Anybody? Think we started climbing back up, more runs? Consolidation. There you go, Ron. That's right. So let's see what happens here. We get a little bump up, catches a little short, catches a little long, runs up to 1,200, 2 trades, and then see how we bump our head again. You get another chance to get out up here with 1,200 in equity, even though you went all the way back down to 800 here. See it? Now, can anybody say why we missed this trade right here? See, you had a beautiful drop here, right? right around the news event, consumer confidence, they just whacked oil. I mean, just slammed it. How come auto didn't get that? Anybody? Anybody know why auto didn't get this one right after news? It wasn't sleeping. It wasn't tired. Anybody know why the auto missed that? Why did it miss this trade right here? Anybody? Anybody know? Well, you could have turned it off. Yeah, because this was pretty much a shotgun. You see all these bars that printed between basically 659.7 and 701. Yeah, so it's hard to say what it would have caught here, but basically what happened was it had a short, it stopped out, and by the time the news event hit, it was already in a trade. See how it was already in a trade? So it didn't see that as an opportunity to get back in. Now, this all printed pretty fast, and in reality, you probably wouldn't have caught it anyway, because it just shotgun these. I mean, all these bars printed in like a minute, 2 minutes. So, but did catch the tail end of the short. You did get a couple of nice trades. Takes you from 800 back up to 1200. Here was your second chance to get out here with 1,000, 1,200 bucks, right? See our equity coming back up here from about 800 to 1,200 up in here. So even if you didn't take that, of course, you cycle back down, right? We take a hit or two here, and then we cycle back up. And then I think this was the high of the equity peak of the day, right in here. Yeah. At least as far as the 7:30 time frame was concerned, right here. So even if you didn't catch this, and then you caught this beautiful breakout long trade here, which I think was another, I think Gary called that one, this was 87.45. Rode it up. Here's another case where you hit a profit target once again. And at the apex of that trade, I think the equity high for the morning was right about in here. Yeah, 1915. So certainly if you didn't catch the earlier two opportunities to get out at 1,000 or 1,200, this would have been another shot to definitely get out here. Ed asking why the stop dropped so far at 659. 659, Ed. Stop dropped so far at 659. Well, I think this is the standard. I didn't change anything in here. This would have been the standard stop. So what happened here is it took the short, dropped the stop, stopped it out, was already in a trade. The shotgun bars did not get it back in, and it didn't short until the probie right here. So it was a probe trade, got in, re-shorted it, stopped out, and then went on from there. So that's what happened over there. All right, so let's just finish the end of the story. We know how this turned out. We cycle back down a little bit. We come back up, break the 2,000 mark just by maybe 100 bucks, and then right now that trade we were watching just stopped out. Just stopped out. Did that get you, Gary, or are you still in? It's coming back up. Look at that.
Still in.
Oh, good for you. You must have been a couple of ticks under here, huh? That's quite a drawdown.
Yeah, what I'm doing is I'm actually keeping my stops. I told everybody I'm going to trust the swings instead. That one just about got me. But it didn't, and it's up about 56.48.
Sweet. Nice trade. That's the trade of the morning right there.
Yeah, it's a beautiful thing. I think it's going to take out this ultimate support resistance and head up like a big dog, too.
Mm-hmm. Well, I'll tell you, if you go back and look, Tuesdays and Thursdays are good oil days. They really are. Ironically, before the inventory report on Wednesdays, it can get oil can get smacked around a little bit. Mondays and Fridays, kind of iffy. Yesterday, for instance, we had that 200 tick run up before the open, and then just chopped sideways on oil. So you got to be careful with that. If you see oil coming out of a little compression zone, which it did at 6, way back over here. Can someone anticipate? See here? See overnight? This is the complete opposite of what happened yesterday. See this just total compression here? Basically between, well, almost midnight. I mean, you were in here until overnight, just chopping sideways.
Just took the highs out, Charles. It's up $7,000.
Sweet.
Yeah,
Look at that.
It's going.
Well, this one turned off, I think, at 8 o'clock, so it didn't take this. If it did, if I put this after 8 and let it run till 9, I would bet it re-entered in here somewhere. Yeah, I bet it re-entered there somewhere because it just stopped out, and then it would have seen a stealthy trade set up somewhere in here, a breakout trade. possibly somewhere in there.
Roosty broke out too. Did anybody catch that?
Yeah, let me drag a Roosty chart down here. I have auto on Roosty. Let's drag that over. There's no more questions on oil. I'm going to show the auto trader on Roosty, and then let's take a look at what it's doing right now. So here's what Gary's talking about right here on the Russell. So you had this little kind of consolidation patch, and then we came in, we did a little probey trade here. Pull right back into support, like such, kind of in this 18 area. You can make the case you're almost kind of going a little bit sideways in here, right in this little pocket right here like this. Pull back at support, and then we punched up and broke through that 19, then 20. And you may have 25 ticks on it. Did you take that, the break here, Gary? Or are you just nursing the oil trade?
No, I did not. I saw it, but it was too late. I'm just in that oil trade managing it.
I mean, you can see the obvious place to get in here. It would have been somewhere around 1950, kind of right in here when it broke up. See it? But just recapping, this is running stealthy. This is running stealth on Roosty, starting at 6:33. I think Lily had a question earlier on when's a good time to start trading the equities. See right here, see this is the 6:30 mark. So the market opened right here on the equities right here. See it? And I want to point out that right around the open, within the first at least couple of 3-5 minutes, you're going to get this kind of a price action here. Here's basically from 6 till about 6:30 is this soupy, choppy up and down thing. See how you get this burst up, 6 o'clock, burst down, comes right into support, chops around, and then of course you can see here about 3 to 5 minutes later, after this little consolidation patch right in here, we get this nice burst up. 6:33. See it? So I like to wait a couple of 3 minutes. You know, usually within the first 3 to 5 minutes, the market will resolve itself in one direction or another, and you'll get some kind of initial thrust. Right at 6:30, I don't like to jump in the middle of that. Right out of the gate there, 6:30. Usually 6:33, 6:35. Market will resolve itself, and you'll get some kind of move here. But you can see here that you were up about $500 going into news. News chopped it around a little bit, then it caught the short. Obviously, this is all shotgun. You probably didn't catch that. But even if you didn't, notice what happened here. It started to try to find its groove, and then this is that long trade that we call. We had a couple of long trades and a probe and a long breakout here that got her up close to about 1,000 in equity here, which is where it was after the apex of the short after the news here. See it? And I think we turned it off at 7:30. I don't think it took any more trades after that. Yeah. So you can see here, I mean, with the exception of this long run here, towards the end of our session here at 8:30, you know, the bulk of the volatility occurred basically between 6:30, 6:33, and about 7:30. And on a news day like this here, let me just bunch this up so you can see it. This is not unusual to see on a news day like this. Here was our initial burst right out of the gate. Couple long trades. Here was our news sell-off. They're very disappointed in the consumer sentiment numbers, right? Then here's our snapback rally. We bounce, little probe trade bounce, and then we chop around, and now you're getting a little follow-on rally here. Ron asking about HE emails. Yeah, Ron, let me do this. If you could, if you want to just hang tight for about like one or two more minutes, I just have 2 more charts to show, and then we'll talk about HEs. Absolutely. No problem. All right, so I want to show here on EMD, if you had just traded stealthy before the news and didn't take any trades after the news, this would have been EMD. This is starting at 6:33. You can see the chart is a little nicer and a little smoother on EMD here, which is not unusual. Roosty's the king of retracements. Here we had a little consolidation patch before the market opened. And then, of course, we saw this nice breakout trade, which we took. Stealthy took it too. Stopped out, and then we had 2 follow-ons. Boom, boom. And then here's a little bit of consolidation before the news. News had a little bit less impact on EMD. But if you didn't want to trade it into the news, this chop here, you could have just turned it off and you would have been up around, well, somewhere between $500 and $600, 470, 520, kind of right in here. See it? Caught the burst right out of the gate, 633. Stopped out, re-entered, hit a profit target, stopped out, profit target, stopped out, and then before the news, shotgun, you stayed out of that. I think a lot of traders would be pretty happy with $500 in the first 30 minutes. I mean, that's all we're trying to do, right? We're just trying to catch a burst here and there in the morning. That's all we're trying to do. Right out of the gate, first 30 to 60 minutes. Patiently wait for any kind of follow-on trades if they set up, right? I think the last chart I had here, if there's no questions on this, was NASDAQ. I have to find it. I had a little NASDAQ chart that you could have traded right around the open. I think it was up a couple $100. Let me see if I can find it. Hold on a second. Okay, you should see a NASI chart now. See the NASI chart? Here again, 633, very similar to EMD. Very bullish coming into the open. Market was grinding its way higher, slightly higher lows, higher highs. We had a little patch of consolidation here right around the open. Here's 630, the market open. Still consolidating, of course, and then you see that Stealthy took the break. It's a nice breakout trade here. Took the break. Hit a profit target, trail to stop, stopped out, re-entered, hit a profit target, and trail to stop. And I think you were up at the apex of the long trade here, around 250. And you've heard us say this before on NASDAQ, any of these $5 instruments, YM, if you trade it, once you capture the first move, I think we called this, I think we called these trades here. Where do we call? Was it 14? I think we called the break of 14, something like that. Once you get these initial pops, if you have modest profit goals for the day, if you're happy with $250, $300, you don't have to keep trading this. There was other trades here. Of course, this was the short that we saw coming out of the consolidation patch. Remember we called the short at 10? Right here. I had the short at 10. Remember we called it out, it broke down, took out 10, went all the way down to 1 3/4. I mean, these two trades alone, if you'd taken one long here, made, say, a modest $200, and this pop down was good for maybe $180, $200. There was two trades, no heat, $400. One contract on NASDAQ, you're done. You don't have to chase it around after that. That's all you need to do. Two little pops and you're finished. I turned this off before the news. That's why it didn't take these trades. I'm just showing what it could have taken right at the open. You just ran it right at the open for 30 minutes and avoided the news trade. This is what you would have got, about $200. Yeah, I turned it off. In this particular case, I'm showing if you just let it run at the open and avoided the news. But we took this one in the room, this little break right here. And everybody sees why we took it, right? See how clean that was right here? Little support area. Real clean right there. That's what you're looking for. By the way, if you recall, after the news, we had an inclination that this break was going to happen, and that's why we like to watch all three of the equities together sometimes, is that Roosty, remember TF? Remember the Russell? She was ripping. I think at the time NASI broke, the Russell had already broken its lows of the day. So this was more or less portending that this break was going to happen. That's why we felt comfortable taking that trade. With everything else heading down, NASI can only swim against the stream for so long, and then she's going to go, right? Yep. All right. Well, let's just follow on and see what happened with NASDAQ. Here we punched up to a fresh high. Here's a couple of probe trade setups you could have taken. Right here. Here's one. By the way, if you look at a longer range chart like an 8 or a 10 or a 12, this has all been blue basically since about the bounce here at 7 and it flipped. Here, here you get a break, probe trade, break, probe trade. Here's a yellow bar probe trade that just set up a few minutes ago, right in here. There's your resumption of buying. So we have a question once in a while, where's the resumption of buying show up? How do I know to get back in? See our little swings? See your little swing? See how it pulls into support and you have a little swing right there? Call it 25-ish. This is your reentry right here. Limit order, market, dome, whatever you like to trade. Line trader.
Ed was, sorry about that. Ed was saying
No,
that
go
his
ahead.
auto took the break at 22.25 on NQ. He's up $1,245.
Who did?
Ed.
Oh, sweet. Nice. Nice trade, Ed. Yeah, there's some nice pops here. I mean, you know, this is pretty clean actually on these little pops here. Been 3 of them. So, you know, I guess the point there is that if you missed the early trades after the news and the pop at the open, and you came in late, there was still, you know, still a couple opportunities here on NASI to make some money. Pop 1, Proby. Pop 2, Proby. Pop 3, Proby. Be trailing a stop kind of right in here now, near your stealthy line. 23 3/4, 33 3/4. Lily asking about gold. You know, I'm not going to speak to gold, Lily, because I'll be honest with you. That's a very, very volatile, whippy, challenging market. I would not suggest to even challenge gold unless you've got, you know, a fairly robust trading account, some very good, a lot of experience in the future market, and can handle some big, you know, some huge pullbacks. By the way, the Dow's actually up 25 now. Erased all those. I think she was down 95 after that news. So the bulls are back in control now. S&P's up. Yeah, I would not suggest trading gold. It's just too volatile of a market to take on. I think you can see here without a whole lot of effort. There's nice trades on some of these smaller markets that can afford you a couple of $100 a pop with very little heat. And once you get good at these, I mean, we have traders, of course, you know, that trade the dollar and trade NASDAQ and these modest little $5 instruments. You know, once you get good at it, I mean, you can do the math, right? Each one of these little pops that give you $200, say you came in here and you put 4 contracts on here right out of the gate. How much would that be? Well, that pop would be about $800, right? How about down here, this short? Say you don't take 1, say you take 3. Well, now you have $600. You take a couple of these poppies here, 2, 3, 4 contracts. Each one of those is you know, $400, $500, $600. What I'm trying to show is you don't have to go after the high flyers to make money. You really don't. I mean, sometimes that's what happens. We get distracted in all these other markets, and we, you know, overlook the ones that are kind of right under our nose here. Anyway, any final questions? We're going to go ahead and wrap the session. Final questions? Yeah, see, there you go, Lily. You know, a couple, $300, $400. You could have popped a couple of NASI trades here and been at your goal. You would have been at your goal by, excuse me, 7 o'clock, 7:30. Even if you didn't hit those, you could take 1 or 2 of these. Each one of these was probably 14 to 20, 40 ticks, $200. Pop, pop, pop. 3 of them. You're right at your goal. 2 of them, and you're done. $400. Still pushing higher. Be trailing your stop here now, maybe 36, 36 and a quarter. Yeah, bulls just want to run this back up. Oh, by the way, we did have that question on high energy times. I think that, what was the high energy time on the equities? Wasn't it like 740 or something like that? 739 or 40 or something?
In the equities, we had one at 606, and then we had a second one at 740. But I think, Charles, the question was, how do you read them when they come on the email?
Oh, okay.
How do you decipher them? How do you read them? That was really the question, I think, that Ron asked.
Well, what I like
to explain how to read them.
How to read them? Okay, no problem. Absolutely, we can do that. What I like to do with the high energy times is ahead of the market open. First, I'll go in and I will look at the high probability trades. And what catches my radar is if something that I normally like to watch and trade, like the equities, you know, EMD, NASDAQ, and the Russell, crude oil, or dollar index and 6E and 6B, any one of those kind of show up on the radar in HPT, say it was 6B, hypothetically, then I would pay particular interest to that instrument. So that's the first thing I do. In other words, it's kind of calling me out that an instrument that I like to trade is now on the radar. Second thing is that I'll actually write them down. I'll physically write them down. I don't do all the ones overnight. Excuse me. Because I don't trade overnight. I know some traders trade overnight. I don't trade overnight, but generally I'm looking from about 5, 6 o'clock, so this something at or near the open of the market for a high energy time. In this case it was 6, so it's pretty close. It's fairly close. And then 7:40, of course we have the news event at 7. We all know about that. That's another thing we look for. News events are like high energy times in the fact that we expect this increased volatility, yes? And then the third thing I look at is something within our trading session. So we trade basically from 6 to 8:30. So you got a 2.5 hour swath of time. And then after the news event, I'm looking for something over here that's going to prompt a trade. In this case, you're looking at 7:40-ish, which pretty much after the trend change here is set up a Proby trade, and then here's our long trade runs right here. I didn't take these because I was setting up the charts to do the recap at the close of the market, but you can see here that we had some nice follow-on moves coming right after high energy. So high energy generally is going to mark a swing high or a swing low, or like a news event, show some increased volatility in the market, which is another word of saying look for breakout and probe trades. Okay, does that make sense, Ron? That's how I the HPTs and the HEs, that's how I use them. So once again, I'll look for HEs right around the open of the market, 6:30-ish. Of course, we'll have on our radar any major news events. We're looking for volatility there. And then any other HE times that fall in our trading zone, which is 6 to 8:30 Pacific.
Charles?
Is that clear? I mean, I don't know how else to put it. Maybe you guys can phrase it a different way. That's how I use and interpret the HEs and the HPTs.
Okay.
That makes sense?
Well, yeah, it makes sense. I think what Ron was saying, though, how do you actually read the email when it comes in? Gary, are you still on audio here?
Yeah, I'm still here. As a matter of fact, I'm pulling up my AOL so I can copy that and I'll show him.
All right, so Gary's going to go ahead, Charles, and bring it up because I think part of the question was, in addition to how to interpret it once it comes in like you did, actually how to read them. What do they mean when it comes in? What does the HPT mean? What does the HE mean? What does perhaps a double asterisk mean? So I think that was part of the question too, and I think Gary's going to go ahead and just pull that up real fast and
okay,
kind of
sounds
go
good.
through a decipher process on it. Yeah. That was it. It's quite a move in the equities. You never know when they're going to take off and move, and that's why you can't really try to second guess what these markets are going to do. They've been kind of all over the place here today.
Yeah, they're really ripping this back up, aren't they?
Yeah.
To heck with consumer confidence. They don't care. Well, ever since the Sorry, Rich. Ever since the Dow bottomed out at that 10.8 number, they ripped it down. Remember, they hammered it for like 6 weeks straight?
Yeah.
Ever since she bottomed out down there, she's been on a tear back up.
If they don't start QE3, that's going to be the key. If there's no QE3, that quantitative easing 3, then this market's not going to go anywhere except sideways but down. If they start the money flowing again, it's going to go back up.
Mm-hmm.
That's if you look at it, there's a direct correlation between the amount of money that they print and stock market prices. It's 100%. And so the more those printing presses run, the more there's money available and the stock market goes up. But once they stop and they don't print anymore, then we're going to move sideways to down. So that's the real key, and that's what they're waiting on. So unless the presses start coming out, again, I don't know, like in the NASDAQ, we probably won't even get above 2350. That'll be the key. I'm sorry, Gary, you were going to say something, and I think we stepped on you.
Yeah, that's all right. I was going to go ahead and show, I think everybody can see I just copied and pasted the email. This is the way it'll come to you at night. Greetings, Gary, or whatever your name is, of course. And we always put the high probability trades for the day, and this is going to be what you're going to be watching for particular instruments that we expect to be higher volatility than normal. That should give you some good runs. And Ron, on your question about the high energy times, of course you can see this is the euro, the 6E. These are high energy times in Pacific time. So if you're not in Pacific time, I think you're Eastern, so you would actually add 3 hours to these. Okay? The equities DX and CL is any of the equities such as EMD, TF, NQ, dollar index, and CL and YM. That's what we kind of track there. Then you've got your British pound, your gold, your DAX, your Bund, and then of course the ZBZN. And on the second times you've even got the beans and the wheat. So what you're looking for on your chart is actually, for instance, at 6:06 in the morning, your time would be 9:06 if you were Eastern time. That's what you'd be wanting to highlight on your chart and see if that would be a good time to watch that market and see if it's going to be a swing high, a swing low if it happens to be a short, or if it's going to continue a good move with high volatility. So that's what we watch those for. Now, if you look at your chart, I think we said, for instance, 740 was a high energy time on crude or the equities. See, here's 740 right here, right there. All right, and I'm going to draw a vertical line on the chart right here at 740. 740, of course, is 9:40 my time. I'm in Oklahoma. All right, so you're watching this high energy time here, and you're seeing that you've got a green background. This is clearly a retracement, right? And you can watch for a breakout. You could watch for a probe trade. See how the probe trade just got you in a nice trade, and you know, just get you a beautiful, beautiful trade, especially the way we teach it. And those high energy times, you're going to find, if you'll mark them on your chart, that they're absolutely amazing. You know, here was another one at I think it was 6:06. Look at this. There's 6:06 right there. What did we get? We got that move we took in the room this morning. Remember that great move? We got nearly 100 ticks, 80 ticks, something like that. Remember we called it in the room? That was a monster trade. So, you know, those high energy times are really, really good. Where did the red show up? I'm not following that, Ron. And one thing too, if you're new to Viper, which I know some of you are, not on trials anymore, but you're actually with the team now, be sure and go to our website and watch those videos. Extremely important to, you know, just fill your mind with videos, because we didn't all become, you know, great traders literally just overnight. You know, it took some time. And go to your subscriber link, your training webinars, put in your username and password, and be sure and watch these videos. You know, Trendline Trader, if you want to use the Trendline Trader. You want to know how the crank stop feature works on all of our strategies. That's a good video for that. The oracles, the stealth, the oracles again, internals. The internals are actually the oracles also. We just call them internals for the dollar index, but it's actually the oracle. One shot, and then your dashboards. And we also had a webinar last night, and it's right here already uploaded. So you just click on it to download it. And you know, believe me, there's a lot of information in this particular page right here for our subscribers. You've got hundreds and hundreds and hundreds of hours to look at. So when we're not trading, we're what, simming, or we're studying to become better traders. And of course, simming is a really, really good way to do it. You know, when we say nicely green, that doesn't mean that you can't turn on the simulator and go ahead and watch those markets and practice, because, you know, just like the old saying goes, practice. All right, that's I think that's all we got, Rich.
Yeah,
well,
I don't know. Sorry, Charles, go ahead. You were going to say something. Go ahead.
Yeah, let me just I wanted to just wrap up on this NASDAQ to show you if you went ahead and ran it, what it would be doing here. Just real quick, and then we can shut her down. I know we're getting long in the tooth here. But remember, we talked about the trades that set up in the after the news here. I just wanted to show, if you ran it, that it actually took those. Here, for instance, is a breakout trade, hit a profit target, stopped out, came back, took the breakout trade, And then actually right now, if you had let this continue to run, would be in a trade, profit target, and the stop, it just let me blow this up here, just missed the stop on it. Here's the stop sitting right here at this red line. See, you get this a lot, you know, because when these markets retrace, you really never know how far they're going to pull back. Some pull back further than others. Here we've had the better part of the fourth run of the day here, and our stop sitting. Your stop would be right here around this 34 mark. You know, the other benefit from this, we mentioned this. I'm not going to beat a horse on this. This last point. You know, even if you're not really comfortable letting auto, you know, fully take and manage the trades, the other benefit of having the autos like Stealth and One Shot is that you get the benefit of seeing it take these trades. So it's almost like a little automated trading buddy sitting right next to you. You know, a lot of traders still are having issues visualizing probe trades and breakout trades. You know, the sort of the bread and butter. I'm stammering over myself here. And if you're struggling with seeing these, you know, this is where the auto comes in. The auto takes it, right? It's just looking at the data stream. There's no emotion here. It's just getting in and out, managing the stops, in and out, managing the stops. Here it just missed it by a tick, so you're still in. Now, by the way, I think at the peak of this trade here on NASDAQ, which is huge, you were up, I think, almost 800 bucks. Yeah, almost 800 bucks. So very definitely, if you were happy and done with that, toggle these puppies off, close position, 800 bucks, thank you very much. By the way, this is, you see, kind of a yellow bar probe trade setting up right here. I don't know. Did you get back in Roosty, Gary?
I got my P&L finally up to 28 even on Roosty, and I'm through with Roosty.
All right.
It came back below that top of trading range again, so I just decided to get out of it.
I don't have a Roosty chart. Well, I do have a Roosty chart here. Let's see if we got that.
Done for the day. Oil did stop me out when it came back below that math that I told everybody, and I got back in. I'm up about 560 from that little support bounce.
Oh, good for you. Yeah, see here, let's contrast real quick. Here's the NASI chart on this pullback here. See the difference? See, look at the difference between these two. This is just the difference between Roosty and NASI. It does this all the time. See how you're still consolidating on Roosty right here? Yellow bar probe. It's not resumed its buying, whereas NASI has already broken to the upside here. See it? Give me a little pop back towards the highs of the day. So it's very different trading styles. I mean, you know, if I know Gary likes to trade the Russell, he's kind of in sync and in tune with it. And if you are with the Russell, trade it. EMD, if that suits your trading fancy. Of course, you can see here in some cases the Russell moves further, and it is $10 a tick. So, you know, the trade-off is you can make more money trading the Russell, no question about it. The downside is sometimes the retracements are very deep, and when it bounces, it's not quite as clean as some of the other instruments, as you can see right here by this yellow bar probe trade. So it's a personal preference thing. See here, for instance, look, Roosty is just breaking out of its box. Just breaking out of its box, and NASI just put a fresh high in. See the difference between the two? See it? Theoretically, Roosty should be up here testing 2750 and breaking it slightly, but it's not. So anyway, just contrasting the two instruments. David, which works better, breakout or probe trades? Well, it depends on whether a market is trending or not, and I think we're running out of time to get into that. But if you watch some of the webinar recordings, David, we get into how the probes and the breakouts work and where they set up. So I'd suggest watching a couple of recordings, and that'll sort of clear that up in your mind's eye.
Anybody answer Ed's question too?
I didn't see it.
Ed's question was, you recommend trading 15 minutes after the FOMC report. Ed, you don't need to wait that long today. All it is the minutes. So there'll be, you know, an initial spike in the first minute, and that's, you know, after that it'll do its thing. It's not like the interest rate announcement. It's just the minutes.
Okay, guys. I think that might be a wrap. Let me save the question log here, and we can wrap her up.
All right, Marco, you take care. I know it's nice over there in Holland in August. It's a nice time. Maybe have a little sip of Geneva.
Have a good one, Marco. Thanks for coming, everybody. No webinar tonight. We'll see you all tomorrow morning in the room, bright and early. Stop the recording here.